Hi and welcome to the Market Alert for Tuesday the 22nd of June 2021. So stocks and bonds have completely erased Friday's Bullard bomb. Financial stability restored once more. And this seems to be the theme here with the news. Plunge protection team assemble. Biden summons Powell, Yellen and Gensler after market rout. Did Biden just call an emergency meeting of the plunge protection team after the Dow's worst week in 8 months? I'm sure he did. Nomura warns of market reversal risk as Fed speak walks back Bullard bomb. As we have now seen countless times before, if the Fed then again bends the knee to market forces, the volatility spike and forced deleveraging hedging of risk assets is then reversed by the dip. That's the old adage, isn't it? And I've said a million times in the Market Alert, they won't let this go down. They daren't let it go down because the whole house of cards comes down. That's why. Last week's volatility is a sign that Fed tightening could be over before it even began. The mere mention of 2 interest rate increases, and they're only going to be 1/4% each over 2.5 years, sent the market tumbling. As I said last week, if the market can't tolerate 1/4% rate rise over 2.5 years twice, then it's in a bad way, isn't it? It's really in bad shape. So this is why the headline here is saying it's over before it starts. Indeed, it will likely take equities tumbling to get the Fed's full attention. Yeah, well, they'll just bring in the plunge protection team again. That's why they call it the Fed put. And then there's some crypto news as well. This ghastly woman, Elizabeth Warren, supports central bank cryptos. Should you be worried? Absolutely. There are all kinds of reasons to be frightened about what is clearly going to happen. And if you don't think it's going to happen and it's a conspiracy theory, well, here's The Economist. And you'll see there that the digital currencies that matter get ready for the Fed coin and the euro. So every transaction that you make will be tracked and logged. And that's where this is all going, implemented by the World Economic Forum. And of course, using the COVID virus as the distraction and the catalyst with which to do it. So that's the cheery news. And let's have a look at economic news. We've got Powell out this evening, 7 p.m. Oh, the joys. I don't know what he's got to say. Let's just have a look at the detail here, see if we can get a bit more from it. What's he actually doing? Emergency lending programs and current policies. He's in front of the House Select Subcommittee on the coronavirus crisis via satellite. Anything could happen there then. And also, while I'm thinking about it, the implied volatility obviously down as the market recovers significantly yesterday. 1662 down to 1454 for the implied, which is no surprise there. Also, a very good video here. I wouldn't normally recommend Bix. I followed him for years, bit out there for me. But this video that he put out yesterday, absolutely priceless. The silver rig has dumped 1 billion ounces in one day to tamp down price. That was on Thursday of last week, and Bix explains this. He has been studying the silver manipulation for the last 20 odd years. That's a side of his research I'll give him credit for, and this very, very interesting. He also did a video recently as well about the amount of fines, or the total amount of fines that JP Morgan have paid, which is in excess of 38 billion for the manipulation of the silver market. So a great video there. There's also another one, Arcadia Economics as well. Chris Marcus put out a great video yesterday as well. Let me just see if I can find this one for you. That one there, silver spoofed lower. You just type this in, you'll be able to pick it up. Again, come back to this chart here. He explains how they managed to spoof the market and then bring the price back again. And Chris Marcus actually has submitted a legal case against the CTFC as well. So if you want to know why you're seeing what's going on in the silver market at the moment, have a look at Chris Marcus and Bix Weir's 2 current videos, the ones that I've shown you here. Right, let's move on to the market action. We'll start off with the Dow. And as we saw yesterday, the market was brought down to the 62%, well, just below 62% of the recent move from this low to this high projected back. And now it's about the upside once more, unless, of course, the market reverses today. This is the first upside high that's been left behind. So I'm going to use this one first for retracements to the upside. And then when we get a bit higher and through these, then I'll switch to this high and then, of course, to this high. But as we make our way up, this is the first high that sticks out there, the first sort of swing high, as it would be known. So these are the upside targets for the Dow. You can see the recovery yesterday thanks to the plunge protection team moving prices to the upside. And this happened early on in the morning session. It was a classic case of the plunge protection team. That was the afternoon, just never stopped. We had one bar down and then it moved higher, but in the morning you can see there, once the German DAX opened, the Dow went and it just continued to the upside there. I don't know how many points this was actually. Let's just have a quick look and a quick sort of ballpark from here up to here. Yeah, 904 point move to bring the market back, and then some during yesterday. So 30-minute chart, again you can see it more clearly. Early morning, and then off we go. And then we had a quiet period. Then the pajama traders also were taking part, and then it was straight up for 60 minutes straight up in the Dow there, keeping the market moving to the upside. In the DAX, a similar picture, obviously not as big a move. And if we just pick up the daily first, again you can see the market moving higher. Again, let's just have a look at the sort of range that we had on this. 377 points there, so not even half of what the Dow moved, but that's not uncommon. We traded down to 62%, and if we go down to a smaller time frame, you'll see that this ties in with the 62% area. Then the market reversing and moving to the upside, a bit more clearer on the daily chart, on the 5-minute chart, and also in the 5-minute chart. If we go from here, measured back to here, you will find that this is 78.89. In fact, it's bang on 89. And let me just remove that so you can see. There you go. So 78.89 is where the market came back to. We then see the market reverse, and then we're off, and it kept moving. And then in the afternoon, moving higher again. Took a moment or two with the DAX, though it traded sideways for a bit. And that's because we had Lagarde speaking yesterday afternoon. But when she started to speak, the DAX followed on there. So we just have a look at the overnight market as well. Just have a look at the bigger picture where we are. And we can see that prices currently are trading at the overnight high. That high is not yesterday's. Oh, it will be yesterday's high. Sorry, of course it will. Cracking up here. Yeah, of course it is. There's the high there. I thought there was something odd going on there. I thought they'd. Some of the spread betting companies have half an hour, and then they restart. I think IG Index does it. Their daily chart's awful because it has just one sort of tiny bar in between. So it trades for an hour and then switches again. It's bizarre. Anyway, now I've clarified that in my own mind. We can see that prices really are sideways. But then again, that's a sort of a 50-point range from there to there. So in that sideways range. So I'll look at the bigger picture in a 30-minute chart as well, because it always gives a nice step back and have a look. I do like longer term charts for seeing where we are in the bigger picture. So now you can see you've got the DP there, the S1. Yesterday's low is a very long way away, of course, because that was where the market started to move back from that 89% and then just moved up all day. So stuck at the high and the 200 MA in the 30-minute chart. There's 100 points plus down to the DP if there is any sort of sell-off in this market. But that will be determined by the futures traders at 7 a.m. when they come on stream, which is another 15 minutes away. So there's the 2-minute chart. There was a losing trade in the morning there. I can tell you that was a loser, but then we continue to the upside there with the current signals in the software. Mid-morning they had a bit of a shakeout in the 2 minutes, and then in the afternoon you can see we had again, you got that retracement here. Let me just show you what I mean from that. So from this low to this high, and then you'll see the retracement back to the BRN, which is also an 89% retracement back to green, and then we're off there. And again, we've already looked at the overnight, but I'm just going to have a look just a bit closer detail, just have a look at that 50-point range, see what's going on. You can see a bit of activity here for sure. And yeah, we're back at the close. Now just going back to the daily, because what I would like to do here is to mark up from this high to this low. The recent high is the all-time high, and this gives you the upside targets. Obviously we've already taken out 38% and 50 and 62, so these two areas are going to be crucial, and I'm going to keep my eye on that 89% level there, that 747, should prices move higher, because as I've said before, normally when you get a correction, that can be another stopping point for the market then to move back again as well. So keep an eye on that one, really important level. Let's have a quick look at the manipulated metals market. At the moment it's getting hammered because of Basel III. So let's start off with the daily chart of silver. You can see the market trading down to the 78% retracements. It's just done this actually. This has happened overnight, and yesterday I spoke about this, and I did put in an order which you'll see has been sitting here overnight. That was yesterday at 6:43, quarter to 7 yesterday morning after I recorded the alert. Hasn't been filled yet at 25.45, just in case the market comes down, but it hasn't, as far as no, it hasn't hit it yet, because otherwise that order would have been filled. So let's have a look at this in a bit more detail. Right, so there's the 50 level, which is why it hasn't been filled. But again, you can see they're just taking advantage on the Asian market, and again they've brought the market back. It's got to get above this 26 level. It really has. Yesterday, if we look at a longer term 30-minute chart, you'll see what happened. They did that. There's the spoof yesterday. Then they brought it straight back, and then 26 has been a struggle for the market. So it needs to take out that 26. And at the moment, they've also brought the market back. So from this low to yesterday's high in the 30-minute chart, again, gives you a great indication of where to expect to find some sort of support, and that's what we've seen here. But again, they've just managed to move the market down sharply and bring it back, which is a consistent thing at the moment. And this is not going to end until Monday of next week, I'm afraid. There's no reason for the market to move to the upside, but I will continue to look to see where you can take advantage of this on the downside, because when you look at the daily chart, you can see that the market has given back from this high. Let me just redo that. From this high down to this current low now, where we've just seen prices come down to $3.22. The market has pulled back, which is a big pullback for silver. So again, it looking like this is going to end shortly. And also, if you look at Bix's video about how they used $1 billion worth of derivatives to slam the price down, well, if you've got to do that to move the market down $3, it's a pretty strong market in my opinion. That's for sure. So all that combined, and the July delivery as well is about to come off the books as well at the CME on the COMEX exchange as well, and that tends to create a bit of volatility as well. So they'll try and tamp down the price, as the CTFC regulator now calls it. Everybody else would call it manipulation. Move the prices down, so that they can get their shorts, either make money on the shorts or reduce the loss. But this will be an interesting bar if it holds today at this level, and especially if the volume is a lot bigger than yesterday as well. Meanwhile, in the dollar, this spiking up a bit at the moment, but in the bigger picture of the dollar, if I can find the daily chart, it's in here somewhere. Yesterday, dollar doing a reversal, and this is a bit of a swine, isn't it, as well, because the dollar puts in a straight reversal from Friday, and silver can't make it through $26. Again, blatant manipulation going on there. So the dollar got a bit of support there at the moment, so my order may be filled at 45, who knows. And then finally in gold, also again you can see being hammered down to the DP in the last 30 minutes. Again in the Asian market taking advantage, but in the daily you can see doesn't look so bad there. So sideways, needs to hold above the 89% retracement level there. Right, I think that's it. I think we managed to cover everything this morning. And let's see what happens today. Don't forget Powell speaking at 7 p.m. And we'll see what he's got to say. Okay, as ever, thanks for watching. See you in the next one.